Hello, welcome to the Humble Investor Bull Bear Market Report. My name is Adam Straseske. If you want to grow your IRA, your 401k, your stock account, I can help. And here's our agenda for today. We're going to go over the broad market readings in this week's operating plan. First things first, we always want to ask ourselves, are we in bull or bear market territory? Should we be long or short on the long-term monthly basis? The answer is long, risk on. Both the S&P 500 and the MSCI All-World ex-USA Index are greatly outpacing Treasuries. This is for the close of March. S&P 500 closed a little bit stronger than the MSCI All-World ex-USA Index, and so we're going to continue to focus on the U.S. markets. But looks good for both of them regardless, and both in a risk-on stance. As far as correction risk this week, there's always a risk of correction. The question is, is this a bear flag right here, where it's a continuation from this trading pattern or this trading range to the downside, or is this a turn? Brett would suggest a possible turn here, and so it looks good for the bulls coming into this week because of the context of being at the bottom of the larger trading range, and support has been held as breadth is starting to increase. As far as the longer term, the weekly stage of the S&P 500, you can see that we're still in this broad bull channel or a trading range. I don't have this trading range lines drawn, but they basically come across like this. I've got a later chart you can see. But point being, nice inside bar, a inside bull bar for the S&P 500, and this is a buy signal, and a trigger is above 2675 level. So looks good coming into this week for the context for the bulls. As far as our operating plans, we still like preferreds, large caps, and U.S. growth for the monthly trender, and then of course our weekly swings. No scalps right now. However, the market is yielding itself to some scalp plays, but we're looking more for a weekly swings, longer term, a little bit longer term stuff. So here's a chart of the U.S. large cap and U.S. growth indice, and both of them look pretty good. I've got the channel outline here and the trading range here. You can see how support was held, and support was held on this one, the U.S. growth as well. So we're going to continue to stick with this until the S&P 500 starts to underperform the MSCI All-World ex-USA Index or gets below Treasuries. Here's oil, down 1.43% for the week. We've got a stop right here, and it looks fine. I really wish it would have broke to the upside this past week in oil. It did not, and so this is a possible double top here. Bear bar doesn't look bad, but we could see a pullback here in oil. U.S. Treasuries up 1.34% for the week. They're starting to rebound off of this support level. And again, the only reason that we're still looking at this one is because the actual tradable vehicle is well within the trading range, not like this particular index looks. But does look okay for Treasuries. They are also within a trading range, and at the bottom of the trading range, thing is that you can see, if you look to the left on the S&P 500, you've got prices way down here, so we're at the top, the right of the chart, where it's the exact opposite for Treasuries. But both within the trading range and bouncing. Australia down 1.27% for the week. A little bit disappointed in this index. Would have liked to see it hold firstly on the channel line. It did not. And then secondly on the moving average, it did not. It is broken through again a bear breakout bar again. Here is our measured move. And so it very easily could come down to this price, and we'll see. We'll see if we can get a buy signal in here. If in fact it does get all the way down to here, then we will start to look for a buy signal and a trigger, get in at a lower price, and then possibly get out. Just play it by ear from there. But anyways, we'll see if prices can get down into this range. Brazil up over 1.5% for the week. Looks good for Brazil, well within the channel line. We've got a second purchase range down here, and if we can see a breakout to the upside, then we'll adjust our stop up to below here. The EAFE value index, we've got a second purchase range here, and nice little buy signal. We'll see if we can get a trigger, but we've got an initial stop down here, so still got plenty of room to move in this index. As far as the operating plan, what we're going to buy this week, nothing for the monthly trender, and then for the weekly swing, we like global natural resources and the S&P 500 value. Trading range, right here's the trading range. You can see this level right here above support, and this is our buy signal, and we've got a trigger above there. Second purchase range down here, and then an initial stop down here. So again, lots of room to move, lots of room to move. You know, probably don't need to put the stop that tight or that loose. Could put it down here, but we'll be okay with doing that. Gives it plenty of room to breathe, and we'll adjust the position size accordingly. And with that, have a great week, and we'll talk to you next time.